Hey everybody, it's me, Adam Chapnick, with the Security Token Academy. Now welcome back. Today we're covering an advanced topic of security tokens called the tokenization of global assets. Now if you need a refresher on the basics about security tokens, make sure to check out our video called Security Token Overview, ICOs and STOs. This will provide you the background you will need for today's show. Here at the Security Token Academy, we see the security token industry as really being born in 2018 and having a major impact on the global financial system. We think it'll be a fundamental foundation of a new financial internet. Now today, I'm here in our Los Angeles studios, and I'll soon be joined by two of the leading experts in the security token industry to discuss the tokenization of global assets. But before we get started, we want to take a moment to thank the sponsors of today's expert panel discussion, VerifyInvestor.com and Inventus Law. We appreciate your continued support. To help us further explore the future world of security tokens, we welcome Joe Cammarata, president of tZero, who joins us from New York, and Chris Housser, co-founder of Polymath, who joins us from Toronto. Now, in this first segment, we're going to review how ICOs and even IPOs can use security tokens. And in the next segment, we'll get into tokenization of global assets. Okay, so Chris, let's kick things off with you. Thanks for being here. Before we
Happy to be here.
Yeah, good to have you. Before we get into the topic of tokenization of global assets, what role do you see security tokens having for ICOs and IPOs?
I think ICOs really are going to start disappearing, and it's really going to start being a lot more of these STOs, or security token offerings. So the Wild West was these ICOs that represented utility tokens, but going forward, rather than these self-described utility tokens, it'll be a lot of securitized assets or securities that are offered on the blockchain rather than these utility coins that we've seen in the past.
Right, Joe, there's a concept that digital tokens can make the trading process more efficient, less expensive, also faster. Can you, for everybody, explain what T+3 means and the significance of the tZero name?
Sure, Adam. Yeah, there's quite a bit of efficiencies that could be gained by utilizing the blockchain and digital securities in general. First off, starting with traditional Wall Street, T3, and now recently in the last, I think, year or so, it's gone down to T+2, means it's the trade date plus 3 days to settle, and now, like I said, it's 2 days to settle. And in that time, we found that there's a lot of expenses, there's a lot of inefficiencies, and I might even say games that could be played between securities lending and what goes on in those 2 or 3 day periods while securities are settling. On the digital side, tZero, the trade is the settlement. So same day, we're settling the trade on the blockchain so that it's settling in near real time, and you avoid the 3 day settlement process. You don't have cash tied up for 3 days. You can't have people naked short selling your stock. There's also the ability for the issuer to know who's holding their stock, who their token holder in the traditional sense shareholders are, instead of them holding their securities at DTCC, which is centralized clearing, in street names, and they don't know who their holders are.
Got it. So we'll talk some more about some of that later. This is very exciting. Chris, you guys had stated that ICOs were the past and STOs were totally the future. What do you mean by that?
I think you've seen recently there's been a lot of regulations and enforcement and subpoenas handed out by the SEC because there's been a lack of clarity so far about what's happening with these ICOs, what's happening in the blockchain space. People are raising a lot of money, billions of dollars, on white papers alone. There's a lack of financial disclosure, and I think that's going to end soon. And traditional shares that you see now, shares in equity funds, shares in VC funds, those will be coming to the blockchain with proper disclosures. And yeah, the ICOs are ending, and we're looking to create a new trend where compliant offerings take place on the blockchain.
Joe, the big news about you guys is that you're going to be compliant. Now, what makes your company compliant that differs from other marketplaces?
So, Adam, just to start off where we came from,
Sure.
tZero was founded from traditional brokerage. My background has been 27 years in fintech, building trading systems, and obviously in the regulatory environment with FINRA and the SEC for years. We already have an existing execution and routing business called SpeedRoute. We do about 2.5% of the U.S. exchange volumes on a daily basis. We have very high throughput, and our clients are existing broker-dealers and exchanges. We're one of the only U.S. firms that only deals with broker-dealers and exchanges. We don't have retail or buy-side customers of any kind. So we're very familiar with the regulated space. And one of the other broker-dealers we have is called an ATS. It's called the Pro Securities ATS. We've been operating that also for quite a few years. And one of our challenges was ATSs are very common in the U.S. equity markets. We didn't want to compete with our other broker-dealer clients, so we started about 3 years ago doing overnight trading. We bring it up at 8 p.m. Eastern and shut it down at 4 a.m. to issue the first ever 24/5 U.S. equity trading. So that's what the ATS was doing before digital securities and still is today. In fact, we have 2 of the 3 largest online retail broker-dealers trading through the ATS overnight today. Reason I get into all of that is our regulatory background. We're also integrated into all of the major order management systems, Bloomberg, Fidessa, SS&C. So we have all of the compliance components. We're already in a regulated environment, so it was not a difficult migration to move over to security tokens. So while ICOs were coming out in 2017, we sat there wondering, when is the SEC going to step in and realize that these are securities? And they finally did in June of 2017. And that's when tZero really became noticed, because we have the only ATS, or alternative trading system, that's actually approved as an ATS and traded digital securities, which was Overstock, one of the first public companies that did a digital security offering that settled away from Wall Street entirely on the blockchain.
Got it. Okay, well now let's talk about ICOs that were launched in 2017. Many of these were locked via Regulation D, which meant that investors couldn't sell them for about 12 months. And soon, many of these lockups are going to be ending during 2018, which is going to allow investors to sell and trade. So, Joe, what does this mean for the security token trading platforms and exchanges?
So we personally are very excited about it. In fact, we're talking to a couple of companies. One of the challenges, though, Adam, that we do have in looking at these, some of these, as you mentioned, they filed for Reg D and they went the right way. The challenge that some of them are having is if they traded on an exchange, Bitfinex, and some of them had, in fact, traded briefly on an unregulated exchange, they may have, in fact, lost their exemption. So that's one of the challenges that we're looking at tZero to make sure any company that we take on to trade through the ATS must be in strict compliance with federal securities laws, Reg D, Reg S, Reg A, or Reg A+. So that's one of the challenges we have. But looking at the coming months, in fact, our own security token offering, the Reg S, or the tokens in general, are going to be issued in about May. We're looking at mid to late May. And then we have 90 days in which the Reg S participants can trade those. So we're looking, in the worst case, having our own tokens trading in August. And we're hoping to have some participants potentially trading in May.
Terrific. Okay, well, we'll keep an eye on that for sure. Hey, so Chris, will we see a number of companies appearing to help with the security tokens for regulated ICOs or STOs and IPOs? And how will they help, do you think?
That's exactly really what Polymath, our platform, is doing. Because right now, if you want to launch a security token, there's a legal hurdle, there's a tech hurdle, and there's a number of steps that need to be taken that's just really difficult for a number of these companies to compliantly issue a token. So Polymath, what we're doing is we're really putting all those steps together, and we're creating an ecosystem that can get these issuers, especially through the tech process, to be able to create a token that's then only tradable to the parties or the authorized investors that their legal counsel has guided them to allow participate in their offering. And then as well, for secondary trading, we're looking at partnering with companies like tZero to provide that additional liquidity for those authorized participants to then trade those tokens amongst each other. So another party that's instrumental in this is the KYC providers, or the identification partners, that make sure the users or the investors are who they say they are, and they're allowed to participate and transact with these securities.
And Adam, just to add on to
Joe.
Chris brings up a very good point there. I think it's worth noting, in 2017, when the ICOs were a hot commodity and people were just jumping in, because they were not regulated, they were not security tokens, people can invest crypto coins into them or cryptocurrencies willy-nilly. What we found when we launched our security token in late 2018 was that it's a very detailed process. And to Chris's point, KYC, AML, enhanced accreditation are very important. And it causes quite a bit of delays. You can't raise the same types of, $50 million in hours or days because you have all of these requirements. So doing it the right way is a little bit more challenging, but in full compliance, there's a lot more. Now, the flip side of that, which is again worth noting, is of the first $100 million we raised, about 70% of it was institutional players. So this was a big change in the market where ICOs were not invested by any real institutions in a security token now that's compliant and in compliance with the SEC and FINRA. All of a sudden we had institutions coming into play in the space.
Yeah, that is a really interesting development. So, Chris, how can tokenization help liquidity of offerings by startups? Can you help viewers understand that?
Yeah, right now, especially these exempt offerings, the private offerings, the ones under Reg D, there's very, very little liquidity. There's some OTC trades that can happen, but if you invest in a venture fund, you're looking at 3 to 10 years for some sort of exit. But now with tokenization, it creates the ability for, let's say, an accredited investor to be able to transact or get out of that VC fund a little earlier and sell to someone else who's interested, who missed the initial offering, but they can participate at a later stage. And I think that's really what these tokenized assets represent. They provide liquidity for a lot of participants. And now people are able to exit positions that they want to or get into positions that they may have initially missed a lot more easily than in the traditional model that we see today.
Right. So, Joe, do you think we're going to see more companies that are similar to Polymath and tZero kind of popping up and working together? And if you think so, how do you think that would work in sort of an ecosystem?
Yeah, I mean, we're seeing them already. I mean, I think between tZero and Polymath, we're kind of the first to our spaces, respective spaces. We welcome additional companies to come in. I mean, there's multiple exchanges, there's 13 U.S. exchanges, and we know for a fact that many companies have applied for ATSs to participate in digital securities and security tokens. So we're trying to help build a community. We don't mind competitors. In fact, we welcome it. We want to build out a compliant marketplace and avoid a couple of bad apples ruining the market for the rest of us. So we welcome it. And Polymath has been great in working with us and trying to create the new protocols and advancing from the traditional ICO and ERC-20 protocols to the new security token protocols, which we believe are going to change Wall Street and capital markets in general.
Yeah, I'll add to that I agree with Joe. There are competitors, if you will, but I see it more as collaboration and for all these parties to be able to work together to really bring this securitized or tokenized securities to the world. And I think it's very important, and there's ourselves, we can't do it alone. tZero, I don't think, can do it alone. So it's going to require the effort of a number of parties to work hand in hand with the regulators to bring this to fruition.
Well, we certainly agree. We're excited for lots more players, but especially about you guys. So, Joe, a few more questions about the security token trading organizations. Okay, first, what's the difference between, you were talking about how ATS, the term, was alternative trading system. What, for the viewers, is the difference between an ATS and an exchange?
So in the U.S. markets, an ATS is an alternative trading system. An exchange is a place that buyers and sellers match. The primary difference is they both have bids and offers, a book, if you will, of bids and offers. The primary difference is in U.S. regulation, an exchange is allowed to display quotes. An ATS is typically referred to as a dark pool, where they are not allowed to display quotes or any prices. So the way they work is you send an order to an ATS, and if there's a match, you get an execution. If there's not, you get a rejection. Whereas with an exchange, you can see what the price is when you route an order there. And the reason people use ATS is they are typically lower cost than an exchange. So many firms, including SpeedRoute, in our smart order router, we try to intelligently look for the dark pools, the cheaper execution cost, before going to the lit markets or the exchanges.
That is super helpful. I know a lot of people didn't understand that. So second question, Joe, still. This one's very fundamental but confusing. People will hear about the New York Stock Exchange, other groups, they talk about crypto trading, but what they really mean is cryptocurrency or Bitcoin-like trading, which that's not what we're talking about here today. It should be noted, as an aside, let me just note that China and other countries banned cryptocurrency exchanges back in September. So, Joe, can you explain the difference in security token trading that tZero will offer and how that's different from cryptocurrency trading?
Yeah, and I'm glad you brought that up. I mean, that's something that I try to do every time I speak to a group, is explain, really, I break it down a little bit differently into 3 buckets. And the first one is cryptocurrencies. Everybody knows Bitcoin, Ether, Ripple. Those are cryptocurrencies, kind of more of a foreign exchange type of role. Then we get into ICOs and security tokens. ICOs and security tokens, again, are not cryptocurrencies and should not be confused. And the ICO is more of the utility function, which in the US is proven to be potentially problematic for US securities laws. So security tokens are now kind of what I believe to be the next generation of utility tokens, or ICOs, but regulated, legal ICOs, where we're seeing institutional and retail investors coming into play.
Right. Now, who can use these trading platforms? Is it all institutional, Main Street? Can they come in? What about American versus international?
So from the security token standpoint right now, depending on your offering, for example, tZero has done a Reg D 506C offering, which requires accredited investors. These are private placements, which are typical private placement requirements for accredited investors. So they need to be either institution or accredited and go through enhanced accreditation. As the restriction, maybe in Reg D, 1-year restriction lists, then general public can come in. Unaccredited investors could come in and trade those after the 1-year hold period.
Great. So finally, Chris, we've been talking about companies raising money through ICOs, but what about companies who are doing IPOs? That's a market of about $36 billion in the US. Do you see IPOs using security tokens? Is this just be a total shift?
Eventually, I definitely do see that happening. I think the first movement for security tokens will be these exempt offerings, as Joe was saying, like a 506C or a 506B. To accredited investors, those types of offerings require less documentary disclosure. But eventually, once the tools are in place, I think some IPOs with full-on documentary disclosure and financials, prospectuses, will eventually come to the blockchain as well. And we'll see these ICOs or STOs eventually become public offerings that may even take over the traditional IPO that we've been seeing for a number of years.
And Adam, I just want to expand on that for 1 second. What Chris said is very important, and it's worth noting. One of the rules, especially regarding Reg D, is if you get over 2,000 investors, you're required to be a publicly reporting company. So
good point.
Expand on Chris, yeah, we in fact certainly are going to be publicly trading, but I believe all STOs are going to be publicly trading because of fractional shares of the tokens. You're almost inevitably always going to wind up with more than 2,000 investors. So they're going to be regulated instruments as we progress.
Yeah, that's a great point. Okay, well, thanks. This is a great discussion so far, gentlemen. Now, quick pause. Today's broadcast is the second in our expert series of live online discussions on the new and fast-moving security token industry. If you missed our first expert panel discussion on the evolution of ICOs to security token offerings, or STOs, you can watch that on our website at securitytokenacademy.com. There you'll also find even more videos and information about security tokens. And if you sign up for our website, you can also join the conversation by adding your comments and questions, and receive our newsletter to find out about new videos and events from the Security Token Academy. You can also follow Security Token Academy on Medium, Telegram, Twitter, Facebook, and Meetup.com, and make sure you subscribe to our YouTube channel. We have a lot of exciting things coming up, including the first ever Security Token Summit on how exchanges and token trading platforms are taking on Wall Street. That is taking place at the Conrad Hotel in New York City on June 11th. You won't want to miss out on being part of that important conference. It's bringing together the major players in the security token trading and exchange industry, including tZero, CoinList, and Start Engine. Plus, David Wield, the former vice chairman of NASDAQ, will be a keynote. So stay tuned for more information on speakers, tickets, and more. Okay, guys, now let's move beyond the use of security tokens for ICOs and IPOs and into an advanced area called the tokenization of global assets. Now, Chris, I know this is really a key interest for Polymath. Can you explain why?
I really think tokenizing assets is what it says. You're able to now tokenize absolutely anything. If you have a Picasso painting, you can tokenize portions of that painting, and now people around the world can own, who otherwise couldn't own a Picasso painting because they don't have enough wealth to do so. They can now own 1/10 of it or 1/5 of it or 1/100th of it if you break it down into tokenized form. The same can be said for securities, and essentially anything, real estate, it can all be tokenized and offer a democratic or a diverse asset holding for everyone in the world. If you want to own a piece of something, provided someone's willing to tokenize the ownership of it, it allows a wide holding or a wide base of users that can have ownership or a portion thereof of that particular asset.
Got it. Joe, what do you see about the future of tokenization? How is that going to benefit people?
Well, actually, that's how we started off in the business. We started tokenizing assets about 2 years ago on the blockchain, and it started by offering software to a Bermuda client of ours. The name of the company is PTN, Private Transaction Network, and what they were doing was they were taking our software. They would go out and buy chunks of private companies, such as Palantir, for example. They would deposit that with a custodian. We would then tokenize the shares. So, for example, if they bought 1 million shares of Palantir for $8 a share, they would deposit them. We would create digital representations of Palantir in our trading environment where accredited investors could come in and register and start trading shares of Palantir, which are a private company and fairly illiquid. Well, now we've provided liquidity events and allowed them to trade.
Wow. When were you doing that?
We started in July of 2016.
Visionary. I love it. So, question, Joe, how do you see the security token trading platforms adding value to issuers and investors in the area of the tokenization of assets? Is there some special benefit that you guys can provide?
Yeah, there's quite a bit. I mean, again, another tZero product, which we're not going to get into much today, is called DLRs, Digital Locate Receipts. Yeah. It's a securities lending product, which adds a tremendous amount of efficiencies to beneficial owners such as pension plans and hedge funds, where they have not been getting treated the best by prime brokers in the previous years. That being said, there's many benefits, and what we're finding is issuers today, when they do an IPO, again, it's held at DTCC and street name, so they don't know who their holders are. They've got the 3-day settlement cycle. They have naked short sellers basically betting against their stock in more shares than they're actually holding. There's quite a bit of detriment to that, and the cost. I mean, listing on a national exchange is very expensive, whereas in a security token, listing fees are drastically reduced. It's fully transparent. You know who your shareholders are. It's all on the blockchain. You don't have the naked short selling issue because it's digital shares. They're not held at DTCC. The issuers know who their shareholders are. So there's many, many benefits. In fact, we've gotten about 2,000 calls, if not more, from companies, and some of them even public companies that want to delist and issue a security token.
Yeah.
Wow, it's exciting. Chris, it sounded like you said you concurred.
I was just agreeing with what Joe said, that a number of public companies are looking to do exactly that, to delist and offer a securitized or a tokenized form of their security.
Amazing.
It's exciting, and I just want to reemphasize also what he said about transparency. I think that's really the beauty of the blockchain, is everything's transparent, and it prevents naked short sellers and other forms of bad acting, because you can monitor everything that's happening in real time.
Absolutely. Yeah, it's exciting.
There's also other options as well. I mean, in an IPO, you're getting equity, the company gets diluted. In security tokens, what we're finding is that there's new aspects and new elements that are very interesting and creative and exciting. You know, for example, the tZero token is not a standard equity offering. We're providing a dividend, if you will, on adjusted gross revenue. There's discounts on products and services, and people are actually hoping for token appreciation. So there's different nuances that you're afforded as an issuer doing a security token instead of a traditional IPO.
Yeah, it sounds like there's kind of a robust community building sort of element to it. That is exciting as well. All right, so let's take a look at the major asset classes. We got real estate globally, which sits at $229 trillion. We got equity at $70 trillion, debt's at about $100 trillion, and gold is at $7 trillion. So Chris, looking at these macro categories, are some of these more well-suited for tokenization and the improved liquidity we're talking about than others?
We've had a lot of calls lately about real estate, especially real estate investment trusts. That seems to be a primary first mover. That's where a lot of the interest is. But ultimately, as I said earlier in this interview or this talk, that I think everything can be tokenized and it will be tokenized in the future. But from what I've been seeing early is real estate might be one of the first movers that starts to take up the token space. And right now, I think the total market cap of all cryptocurrencies or crypto assets is 350 million or so. If one institutional investor starts moving into the space, if security tokens gain traction, I think that market cap can easily double or triple just by the amount of wealth that institutional investors can start bringing into the crypto space.
Yeah, well, let's talk about the size of that real estate class. We got real estate assets show $169 trillion in just residential and $32 trillion in commercial, and then they even count $27 trillion in agricultural. Joe, do you have any thoughts on the tokenization of one of those, residential versus commercial, or do they have any relative merits?
Yeah, absolutely. In fact, we've also had some of the early, as I mentioned, doing the private tokenization for private companies earlier. We also have had a lot of interest in not only real estate, oil and gas, diamonds, films. I mean, it's really getting out there. But in particular, to back up what Chris was saying, is real estate from an institutional standpoint is similar to what we're seeing in the STOs. Small retail clients or just general accredited investors didn't necessarily come in strong for security tokens. It was 70% institutional. They're going to be the early adopters to this, to security tokens in general, whether it be equities or real estate. So I believe that the commercial real estate will move first, and we're already seeing that. I have yet to see any residential real estate do any fractionalization or tokenization of interest yet, but I think it will come eventually.
Yeah, are all my neighbors going to start owning my house? Is that what I'm going to start doing? Sounds interesting.
You want to sell it?
Yeah, right. Okay, so Chris, do you have any thoughts about the relative value of the real estate before I move on? Like
no,
which
I agree
types?
with Joe, and I also think commercial real estate will come first, but you're right. Maybe if you want to sell your house, some pieces of it as well.
All right, also, Chris, since people can already invest in real estate funds, REITs, what's the benefit? We were talking a minute ago about how we're seeing movement in REITs. What's the benefit of investing via security tokens there?
I think one, liquidity, and two, it provides just a greater class of people that are, or a greater group of people able to invest in that particular REIT. Depending on the regulations and the jurisdictions, we'd like to see it where globally anyone can participate in any REIT. They'll have to go through an identity and verification process. But now you could have someone in Australia who's interested in a REIT in South America and participate that way. So it allows people worldwide to participate in offerings worldwide, which right now is a little more difficult than I think the blockchain will end up offering.
Absolutely. No, that's a great point. So now let's take a look at Wall Street and the security tokens. Chris, we hear that Wall Street firms are actively exploring the use of blockchain. You hear that all the time. Are companies like you guys going to collaborate with Wall Street, or will you be more of a competition, you think?
As I said before, right now we're definitely looking to collaborate with anyone and everyone and help grow the security tokens movement. Wall Street has been, I think, a little slow to pick up the blockchain, but now they're scrambling and they're starting to realize that the blockchain could take over a lot of what their business is. I know a prominent Wall Street figure said about 6 months ago that Bitcoin was a fraud, and now they're embracing it. So yeah, we're happy to work with everyone, and I think blockchain will end up taking over, and let's work at it together.
Yes. Even Jamie Dimon can change his mind.
There you go. I didn't want to say his name.
No, hey, friend of the show. So, Joe, is there a point in time you think when the security token trading organizations might have a material effect on the business or revenue of other ATSs and exchanges, or is everybody play kind of in the same sandbox?
Well, I think there's a little bit of a conflict of interest right now. I mean, as we talk about STOs, it's really what we're doing, and as we talked about earlier, between the DLR, we're disrupting securities lending, we're disrupting issuance, we're disrupting exchanges. Right? And these are by far the most profitable and also inefficient areas of Wall Street. So part of the problem that we're seeing is why Wall Street's not adopting this quickly is it's almost corporate suicide to their securities lending business, their listing business, their investment banking business, and their trading businesses. So they're kind of in a quagmire where they can't quite adopt it unless they're going to kill off or compete with their other businesses.
It's fascinating. So, okay, Chris, I hear you guys have some other things in the works. What can you tell us about the Polymath Venture Fund?
It's in the works. We're definitely looking at creating a fund that can then participate in a lot of these security token offerings. And we really feel that we've been in the space now, well, I should say the security token space for a year, the blockchain space for about 5 years for myself. And we have a good grasp of what proper token economics are, proper offerings are. And we'd really like to create this fund that's able to really help support the security token network and participate in some of these early movers that are looking to tokenize their securities.
Well, let's move to a viewer question. We actually have questions from the viewers, which is exciting. David B. asks, how do you see tokenization affecting the securities exchanges, especially the requirements for BD regulatory compliance in trading, tracking, reporting, and record keeping? Gentlemen, your thoughts? Maybe start with you, Joe. What do you think?
Yeah, I could take that one. It's actually something we've been dealing with proactively, and that's a big part of the regulatory environment. So when we first went to FINRA and the SEC back in 2015 and said, hey, we'd like to issue, trade, clear, and settle on the blockchain, they said, what's the blockchain? So it was a 9-month roadshow with all of the regulators, FINRA and the SEC, probably many people, many meetings throughout the country, and finally they understood it. And the reason we got that to the point of them understanding was we had to parallel all of the compliance. They wanted to make sure that we were following all the same rules, all the same broker requirements, compliance, 15C35, recording requirements, custody and control, utilizing a clearing firm, the wallet at the clearing firm. So we've really paralleled almost all of the rules. And I think the fundamental difference at the end of the day for people to easily understand is DTCC is Wall Street's consolidated clearing. The blockchain is Wall Street's decentralized clearing. So DTCC is centralized clearing, blockchain is decentralized clearing, utilizing multiple trusted entities.
That's a great answer. Okay, our next question comes from another viewer, Jenny V. She asks, what are the benefits of issuing security tokens instead of traditional securities if the issuer has to offer them essentially the same way? Chris, you have thoughts on that?
Yeah, it goes back to what I was saying before. It just allows them to offer their securities and raise funds from a wider group of people. Ideally, we'd like to see a world or regulations whereby anyone can participate in these offerings, given any jurisdiction. So it lets people raise money from a much wider group of people. And also, I'll add to that, there's a lot of people who've been in Bitcoin and blockchain since, let's say, 2011, 2012, and they have a lot of crypto wealth. They're not looking necessarily to convert it to fiat and then just have dollars in their bank account, but they are willing to convert it and diversify into other crypto assets and crypto securities. So I think we would see an offloading of some of the generated crypto wealth and have these this group of people diversify into more secure assets.
That's great.
And it's also it's also
ahead,
much
Joe.
easier. It's a much easier process. I mean, you think about traditional doing an IPO, and I'm going to use us as an example. We did a security token offering, and we've literally within about 60 days raised almost $100 million. You would never be able to do that with a traditional IPO.
Mm-hmm. That's great. All right, final question comes from Brad Johnson, who asks, Will it be more common that investor distributions will be paid to token holders in the form of more tokens, like an ICO might, or that distributions will be made in fiat currency and the token simply instructs the sponsor who to send the cash distribution to? Guys?
I think really what's great about the blockchain is if a company wants to make a dividend payment, they can say dividend payment is happening on July 1st, and we'll take a screenshot or a snapshot of all token holders prior to that date. And then at the time of dividend payment, everything can be paid out proportionately on the blockchain. And there's no need to interoperate with banks because it just happens automatically and programmatically on the blockchain, which will allow those types of payments to happen much more efficiently and at a much lower cost and take out a number of middlemen.
Great. Well, we've survived the lightning round. So let's talk about a timeline of the security token industry and what the two of you predict for the industry moving forward. Joe, as you look to 2018 and beyond, do you have any observations or predictions about the security token industry or the security token trading organizations in the U.S.?
Yeah, absolutely. We're finally starting to see it accelerate here. In fact, I'm meeting with the SEC next week. We've been invited to collaborate with them, sitting with about 40 regulators in Washington, D.C., to now finally start furthering security tokens. I think they realize it's happening regardless of what they'd like, and they want to make sure it's done correctly. We're seeing a lot more interest really in the previous couple of weeks. And as I mentioned, we're looking for, and I don't know if you saw the recent press release, that we have put a prototype out of our token trading system to let people see there's a video, there's a movie. We're open for business. We're just waiting for the Reg D guys to free up and be able to trade, or our own Reg S offering, which will be ready by August. So we're potentially looking at a couple maybe trading in May. In the worst case, we will start trading our own in August.
That's exciting. You mentioned Reg S. Do you have any predictions about international security token STOs, security token trading organizations?
Yeah, so that's something else that we've gotten a lot of interest from our international exchanges. Mm-hmm. And we're dealing with quite a few already who realize that ICOs may not have been good, but they could start listing. Many international exchanges are very small and have not had a real large amount of volumes or issuances in the previous years. They now see this as an opportunity. And you know, for example, we have an arrangement or an agreement with Columbia Mercantile Exchange, Columbia Stock Exchange, where there's many, many smart entrepreneurs, great businesses that can't raise capital. Well, they can now go to the exchange and issue a security token and get distribution through the brokers and just treat this just like an equity in their local country.
Fantastic. All right, Chris, your turn. Any predictions you want to make about the security token industry in 2018 or beyond?
Definitely. Yeah, I'm optimistic for sure right now. Of that $350 billion market cap, I think maybe 10 million of it is self-described security tokens that we're seeing traded on the blockchain at present. I think you will start seeing a lot more security token offerings coming out throughout the rest of 2018. And by 2019, that the market cap of securities versus utilities, securities will start to overtake utilities. And by 2020, securities, I think, will dwarf utilities. And once institutions are involved, it will be hundreds of billions, if not into the trillions, of value of securitized assets trading on the blockchain compared to a much lower number for these so-called utility tokens that we're seeing today. So the movement is starting now, and it's going to grow very fast, I think.
Awesome. Now, Joe, I also had a note to ask you about the comments from tZero this week regarding the trading platform and possible operations in May. Any other quick updates? That's what you were just referring to, right?
Yeah, as mentioned, we're talking to a couple of companies about potentially listing their Reg D and or Reg A plus in May or June. We're waiting on confirmation of those.
Great. All right. Well, we're holding our breath. It's exciting. All right. Well, that's a great discussion. I want to thank you so much, Joe Cammarata with tZero, for joining us today from New York. And also thanks to Chris Housser from Polymath for joining us from Toronto. And a special thanks to our sponsors of today's show, VerifyInvestor.com and Inventus Law. And thank you for tuning in. As a reminder, you can keep up with the Security Token Academy on Telegram, Twitter, Facebook, Medium, and Meetup.com, and by subscribing to our YouTube channel. You can also sign up on our website at securitytokenacademy.com for updates on new videos and events. Stay tuned for more information about our Security Token Summit on how exchanges and token trading platforms are taking on Wall Street. The summit's taking place on June 11th at the Conrad in New York City. You'll want to be there to join David Wield, the former vice chairman of NASDAQ, along with representatives from tZero, CoinList, StartEngine, and many others for what is sure to be a great conference. That's it for today. Again, thanks to all our guests and all of you for watching. For Security Token Academy, I'm Adam Chapnick.